Hey, good morning, everybody, and welcome to today's video, another weekly video with some swing ideas for next week. This is Sami Abusaad. I'm Director of Education at T3 Live. Happy to be with you. I hope your weekend is off to a good start. Let's go ahead and get started. Before I do that, though, I just want to flash this, show you the disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. It's not to be construed as investment advice in any way, shape, or form. So with that said, let's go ahead and take a look at the market, and then we'll go ahead and look at the ideas that I have for you for next week, okay? First thing is the cues had, remember in last week's video, if you watch these weekly videos that I put out, I said the line in the sand would be this pivot, and we broke it. This was 186.80 or something like this, I believe. This is the daily chart of the QQQ, which is the tracking ETF for the Nasdaq 100. As you can see, it was 186.87. So we broke through it, and that ended the uptrend on the daily chart. Now, we really did not break under a significant pivot. A significant pivot is one in which the market makes a new high. So once you make a new high, then this becomes a significant pivot. So this wasn't a significant pivot. Now, did we break under the long-term trend line? Sure. Did we break under the moving average? Sure. Does the moving average now, do we have price now below the moving average? Absolutely. Does the 20 MA, when I say the moving average, I mean the 20 period moving average. Does the 20 period moving average, is it now flat and maybe perhaps going to start pointing down? Sure. All weak, all signs um, of coming weakness, right? But what happened also on Friday, that big bottoming tail is bullish, so that counteracts it. Now, again, I don't really like I no longer like the market to go higher, but I also didn't like seeing that big bottoming tail because I was expecting the market to pull back to 175 or the rising 20 period moving average on the weekly chart. So will that happen? I'm not quite sure. Last time I also thought we were on March 21st when the market topped out. I also thought we would reach the 20 and we didn't reach it. This time we're a lot more extended on the weekly chart than we were here. And don't forget, markets top usually after taking out the highs. Why is that? This is very, very counterintuitive. Markets top out not on, not into resistance, not when they rally into resistance, but usually after taking it out. And the reason for that is because anybody that was still sitting on the sidelines that hadn't yet bought, we call that the last batch of buyers. If they hadn't yet bought, once the market takes out the prior highs, they all go long. They finally go long, and then there's nobody left to buy. So the market runs out of demand. So usually that's what happens. Yesterday in the strategic day trader room, I said, I was talking about the JMIA, and I said, oh, watch out, because now we just took out the lows. We will probably bottom. And that was it. The low was like 26. We went to 1813. And from there, we rallied $6, more than $6. So that's what happens is usually when the market is falling or rallying, or the same with stocks, of course, it doesn't stop at exactly the prior low or the prior high. It takes it out first. And if it does, it becomes a better signal that it's the top or the bottom, right? So I still like the market to continue lower, but of course, this is a range expansion bottoming tail. That's pretty bullish. So I don't think we're going to fall apart, and I also don't think it's going to happen right away. Meaning, even if we were to continue lower to that 20 MA on the weekly chart or around 175, it's also the 200 period moving average on the daily chart, that red line. Even if we were to continue there, to get there, I don't think it's going to happen first thing on Monday or Tuesday. I think it's going to take some time before the market can negate this big green bar, big bottoming tail bar, unless we get some news, unless we have some really bad news about China or whatever it is, then perhaps, sure, it could happen. But for early next week, I'm going to be neutral with a slight bearish bias. Again, neutral with a slight bearish bias. I like to be all out bearish. Okay, that's what I like to do. I like to be really bear. I mean, I like them. I like bearish markets. But you also want to be objective always as a trader. Okay. So for next week, at least for Monday, I have some ideas for you. Um, we have the following. We have best, which is a daily buy setup. That's not bad at all. I like it as a long. Let's check on the weekly chart. Weekly is also a transition on the weekly time frame. There's this transition going on. That's not bad. I like the daily more as a daily buy setup. Nuan just broke out against a weak market. I mean, that's impressive. And has a 1, 2, 3. The problem with the Nuan is the second bar is pretty large. So with a 1, 2, 3 setup, 1, 2, 3 is when you break out, put in a doji bar, and then higher, the third bar. This bar isn't very small, so entry here, stop is way down here. So that's the only issue. Otherwise, I like it. Better than Nuan, to tell you the truth. It's not on the list anymore because it triggered already. Is Match.com. Had a tier 1 gap on Wednesday, I think. It was an earnings play for the strategic swing traders, so we were in it. I was in it, and has and this is right off the rising 20 on the weekly, right off the rising 20 on the month, not right off the rising 20 on the monthly, but breaking out to all-time highs on the monthly. So I really, really like it long as a long-term play, in fact. So Match is pretty good. It's even better than Nuan, in my opinion. OMI is a transition A. We played the MAXR, same exact idea last week, worked, and then so the OMI is similar. I like it when the moving average is already right by price and pointing up like so. But is this bad? No, that's not bad at all. Could it be better? Sure, but it's not bad at all. So I like the OMI long with a stop just under 388. Okay. SSYS, I like it more as a long-term play. Check out the monthly chart. Possible transition A setting up. So markets move in cycles, stocks move in cycles. Up, that's the stage 2. Sideways or volatility high in stage 3, and then it breaks down. Then it goes sideways again and the cycle repeats. Okay? So that's what I think is going on with the SSYS. It's been basing for 1, 2, 3, 4 years or so. I like it higher right here, stop right here. It's a low odds play, but if it works, it'll be huge. Okay, it's a low odds rising. The moving average on the daily is not even rising, but it's a huge. It will be a huge reward to risk. Container store breakout over the base, stop under it. Okay, so I like a lot. I'm planning on playing the container store. X-ray is very bullish. This stock was the weakest stock out there, and then once it bottomed, it almost has doubled, almost. And the market fell apart a little bit recently, last week. This thing gapped up and it's been basing really tight. So I like the X-ray higher. Okay. Looking at the bearish items, we have AAOI as a short. Under the base is a 1, 2, 3. AAOI. CLS is a sell setup. So it'd be under 725, but it's really thin. Be careful. DBD is a sell setup. Beautiful hourly chart also on the DBD. So it'd be right here short. Stop kind of big, unless you want to use this as a stop, which I wouldn't. So DBD is also a sell setup. INFN is 1, 2, 3. I have a bunch of other 1, 2, 3s, but the first bar is too big. For example, 10 is a 1, 2, 3. What else is a 1, 2, 3? I have a RYAM is a 1, 2, 3, but I don't like the 1, 2, 3 setup when the first bar is absolutely huge, like so. Why? Because usually it doesn't follow through. I can show you, just from memory, the DLTR, when it was a huge first bar, it triggered short and then would have stopped out. So when the first bar is absolutely huge, I don't like it that much. So that's why I like the INFN. It's not as big as some of the other ones that I showed you as a 1, 2, 3. Nelson looks slower. This was an earnings play also. Beautiful. I'll do a video on the earnings plays sometime soon, but if you're in the strategic swing trader, you know what's going on there with the earnings plays. Knock on wood, but we've been killing it. We've been knocking it out of the ballpark. Um, okay, so the NLS looks lower as a breakdown, and then SBH is a sell setup slash breakdown. It would be right here, stop right here. I don't like it when it's a little sloppy like so, overlapping candles, but I like the fact that it gapped under several months worth of basing. So anybody that's in it, that bought it and is holding it, is now holding a losing position. So this looks lower to me. I'm just looking up the larger time frames. I like it on every time frame, but I like it the most on the daily. And then triple V is a sell setup. I don't love it on the daily chart, but that's a nice hourly chart, nice hourly breakdown if it can take out the double bottom right here. Okay? So under this bottoming tail and under this green bars low. So I like it. So those are some ideas. If you're in the strategic swing trader, you can log into your account, T3 Live account, um, go to customer portal, and you scroll down to find the tracking sheet, and you'll see the plays posted already. Okay, we have some nice setups I think for next week, and I'm also gonna be continuing to focus on the earnings plays because that's what's been making the most money. So I'll see you guys next week in the room. I hope for those that are just watching the video, I hope you have a great um, hope you have a great rest of the weekend. But check out the link. I was gonna say for those that are not members, be sure to check out the links in the description of the video. And talk to you guys soon. Take care. Enjoy the rest of your weekend, and we'll talk soon. Good trading, everybody.